Welcome to another news roundup on MyCPE One. My name is Jason Dynison. I'm an enrolled agent. I am a teacher. You can hear me in the archives here at MyCPE on a lot of different tax topics, teaching on them. And I do a variety of content creation, host podcasts, and on and on. And every now and then, we like to do these roundups of top news stories from the tax and accounting world. So let's get started with the Big Beautiful Bill. That's actually the name of the legislation, the one big beautiful bill. The House passed this a few weeks ago on a one vote margin, and it's now in the Senate. It's not expected now that the Senate is going to come up with their own version of the bill anytime too soon. The Senate had originally said that they wanted to pass their version of the bill by July 4th. And the latest that I'm hearing is that that probably won't happen. But it still could be sometime this summer that it happens. And if we think of how legislation works, the House passes a bill. Now the Senate has to come up with their own version of the bill. It could be exactly the same as what the House came up with, in which case things just go to the president for signature, but it's not expected that that will be the case. It's expected that there will be some pretty big changes in the big, beautiful bill in the Senate. And then there's going to have to be reconciliation between the House and the Senate to get a bill that everybody agrees on, and then it goes to the president for signature. So it's always hard when we talk about proposed legislation because nothing has happened yet. Really, I mean, yes, a version has passed the House, but, how much of this will become law? We don't know. Some of the things that are in this: no tax on tips or overtime if your income is below $160,000. And there's no, other than the income limit, there's no restriction on the amount of tips or overtime that you can exclude. You'll still have tax withholding done on it, and it'll still get put on your W-2, but then you can deduct it on your 1040 under this proposal. Remember, this is a proposal. It is not set in stone. So don't have your clients make decisions on anything yet. Also, before you go telling businesses of all types to shift to being tip based, there is a provision that says that this only works for people who are employed in businesses where tipping is customary. There's also these what are called Trump accounts, where there'll be $1,000 put in for any child that's born between 2025 and 2028, and then parents can put in another $5,000 annually, no tax deduction. It's kind of like a 529 account, but you can put up to 5,000 into it and the accounts grow tax free. When the money comes out someday, it's not taxable if used to pay for college, a first home, or starting a business. Any other usage would trigger taxation. And the accounts have to be fully dispersed by the time the kid turns 31 years old. Let's talk about the SALT provision first. There's a proposal. Currently, the SALT limit is $10,000 for itemized deductions on state and local taxes. The House bill would increase that to $40,000. And at higher income levels, that would start to phase down back to $10,000, but only for high income people. It would also eliminate the electric vehicle credit, the $7,500 electric vehicle credit, and also the credit for qualifying used vehicles and the business related credit for business electric vehicle purchases. Public Company Accounting Oversight Board, PCAOB, would be eliminated as well, and all of its duties would be handed over to the SEC. There's also this revenge tax, is what it's called, which is a tax on foreign investors from those countries. If the country levies taxes on certain types of U.S. companies that offer digital services. Couple of other things, this remittance tax. People in the U.S. sending money abroad would get hit with a 3.5% tax on that money, at least in some situations. President Trump had talked about ending taxes on Social Security. That's not going to happen in this bill, but what did happen is an enhanced standard deduction for elderly people. So $4,000 extra dollars in the standard deduction. Another big thing for a lot of businesses that have research and development expenses is the bill would allow for a deduction of those expenses instead of currently the mandatory capitalization and amortization of those expenses. They would be deductible in full. Also, it's not in the article, but the House bill would bring back 100% bonus depreciation. So that's another thing to watch for. Currently, bonus depreciation, it's at a 40% rate. Let's move on to some other news. The Chrisleys, Chrisley Knows Best, was their reality show. Todd and Julie Chrisley were sentenced to prison time because of various fraud charges, and President Trump has now pardoned them. So these are reality TV people. They had been convicted of $36 million in bank fraud, taking out fraudulent loans from banks in the Atlanta area based on fake documents and financial statements. And there were also unpaid taxes to the tune of around $500,000. So Todd got sentenced to 12 years in prison and Julie 7 years in prison, along with a large amount of restitution that was supposed to be paid. So now they've been pardoned. Their daughter was kind of leading the charge on this, speaking at the Republican National Convention and being on various programs like on Fox News and such, painting the case as a politically motivated takedown. And so now the Chrisleys have been, they've been pardoned. Let's move on to some other things, more court news. Vanguard had a $40 million tax settlement that was recently rejected in court. So this centers around some things with mutual funds that led investors to get an unexpected tax bill. And so there was a big lawsuit. And Vanguard wanted to make this all go away with a $40 million settlement, a class action settlement. And so basically what happened is that along with this class action lawsuit, the SEC also investigated and dropped the hammer. And their hammer was a lot bigger. It was $135 million in fines, with over $106 million earmarked for investors. And so the latest on this is that the judge has basically said that the $40 million offer by Vanguard is off the table now, and the SEC piece of it is what is in play. So, it's a cautionary tale for not just the vanguards of the world, but for investors also. And staying sharp on what's going on here. I had a client, they weren't at Vanguard. I don't remember who they were with. It actually wasn't the company who did it, it was their investment advisor who did it. But like a whole bunch of people with this guy got put into certain funds that generated PFIC situations. If you don't know what PFIC is, good for you, but it has to do with certain foreign investments, triggering the need to file a Form 8621. And, for this particular client of mine, it was a small amount. It came to, I think, $91 that had to be reported on the 8621. But we still had to do it because they had invested in something that wasn't a US based mutual fund. They invested in something in another country. And then once people started saying, hey, wait a minute, then they pulled the money out of it. So it was a 2 years, there were 2 years that this client had to deal with that. But you got to watch those things, even just flipping through the big investment 1099 packets to see, see what's going on with things, and catching those things that the investment advisors might be doing. Other news, artificial intelligence updates. So, Builder.ai is having problems. Microsoft is one of the big investors in this company. And they had $1 billion valuation. It's a no-code app building platform. And now they're filing for insolvency in multiple countries because of inflated revenue claims. So cooking the books and inflating revenue by over 20%. And there were some whispers of this that resulted in the company bringing in 2 Big 4 auditors, and that found a lot of problems. So now there's investors feeling the heat, creditors and debtors and employees. Other AI news, BDO, an accounting firm, has a 5-year, $1 billion strategy for this playbook of theirs with AI that involves several pieces. Chat BDO, which is an in-house AI assistant. And they've already had this for almost 2 years now, and the company says it saved 600,000 hours in that time. There's also an AI-powered tool that will sort through all of the company's data and make custom client recommendations. A risk assessment coach, which is useful for auditors. And then a document management solution using AI workflows. And BDO is certainly not the only CPA firm or consulting firm that's doing this. Deloitte, EY, KPMG, and McKinsey all have in-house AI, and certainly others do as well. Even if you are a smaller operator, I'm just me, and I don't even do a lot of accounting work anymore. But if we go back up here, 12,000 hours or 12,000 users, 600,000 plus hours. I use AI for some things, not everything. It does have limitations, but I use it for some things. And the things I use it for definitely save a great deal of time. Tasks that would have taken me probably 45 minutes, I can have AI do. and you have to review what AI does. But it takes that 45-minute task and probably cuts it down to maybe 10 or 15 minutes, sometimes less. And one last story, Morgan Stanley has been hit with $124 million by the Dutch tax authorities. And it's based on some things that they've done with certain dividend things. Um, and basically, the Dutch Public Prosecution Office has come in and said, we don't like what you did. This is not legitimate. So you owe us 124 million euro, which is about $140 million in US dollars. So, if you are in a bigger CPA firm and you're dealing with companies that are multinational, this would definitely be something to keep an eye on. And that wraps up our review of some of the top tax and accounting stories from the last few weeks. Join us again soon for another episode. Thanks, and have a great day.